Luke Lango claims the number one tech stock of 2025 is not an AI company, and after picking winners of 819%, 3,570%, and 7,120%, says a new tech breakthrough will sweep the market off its feet in 2025. I reveal the stock in this video so you don't have to buy Luke's newsletter. Keep in mind, no paid or proprietary info is given away in this video, and it's all guesswork based on clues in Luke's publicly available sales presentation. Before we do anything, let's look at Luke's recent publicly available stock picks to see how good he is. Luke recommended the LiDAR company EVA in June 2022 and claimed they would make products for Apple's car. However, Apple has recently stated that they will not be making a car, and the stock has performed poorly. In June 2023, Luke claimed Symbotic was his number one AI stock. There were a lot of good AI stocks to pick back then, but this wasn't one of them. In July 2023, Luke claimed Microsoft was a backdoor ChatGPT play, and the stock has gone up since he recommended it. He recommended Dogecoin in April 2024, and at one point it tripled, but if you held on past that, you're basically break even. Luke claimed Enovix was a silent partner of Apple back in September 2024, and the stock is down since. Let's shift back to Luke's new teaser and try to figure out the stock. Luke starts his teaser the same way he always does, by claiming he was the number one stock picker in America in 2020. This was according to TipRanks. And while Luke recommends a lot of risky tech stocks that can occasionally deliver big gains, but his results from 5 years ago don't help you now. According to TipRanks in 2025, Luke is currently one of the worst stock pickers out there according to TipRanks, ranked 39,091 out of 40,409 experts. Anyway, in this new presentation, Luke makes the case the number one stock for 2025 has nothing to do with AI. Luke eventually starts to talk about the tech he's pitching, and it's self-driving cars, and in particular he's pitching LiDAR. LiDAR, light detection and ranging, is a remote sensing technology that uses laser light to measure distances. It works by emitting rapid laser pulses toward a target and measuring how long it takes for the light to bounce back. This data is used to create high-resolution 3D maps of environments, making it useful for things like self-driving cars, drones, and topographic mapping. According to Luke, a Trump announcement could send self-driving stocks through the roof, which is why he's pitching this stock now. Here's how Luke explains it. Bloomberg recently reported that Trump's team is creating a national set of rules when it comes to self-driving cars, and it could be very favorable to the industry. This is the key for self-driving technology. To this point, overly restrictive rules and regulations have stunted the growth of self-driving cars. But with support from the White House and a clear set of national guidelines, we could see self-driving cars take off in 2025 and beyond. Here are the clues Luke leaves for us to figure out the self-driving tech he's pushing. First, this company makes self-driving software and then sells it to other companies to help build their fleet. Second, it is the leader in providing self-driving software for trucking and shipping companies. Third is, it also makes custom sensors and LiDAR that connect to its smart software solution set. The company recently signed a deal with Uber to begin testing driverless trucks between Dallas and Houston, a major short-run shipping route. I'm going to reveal the stock in about 20 seconds, but before I do that, I want to remind you to click the link in the description to check out AlphaPicks. I reviewed over 100 stock picking services, and AlphaPicks performs the best and actually beats the market easily. If you click the link in the description, you get $50 off AlphaPicks. So go ahead and click that link and take advantage of this amazing deal. Based on the clues, I believe the company being pitched here is Aurora Innovation, and the ticker is AUR. Aurora Innovation is a US-based company specializing in self-driving technology with a particular focus on autonomous freight transportation. Aurora aims to revolutionize the logistics sector through its flagship product, the Aurora Driver. The Aurora Driver is a comprehensive autonomous driving system designed to be integrated into various vehicle types, from passenger cars to Class 8 semi-trucks. It combines a suite of sensors, including LiDAR, radar, and cameras, with advanced software for perception, motion planning, and control. Notably, it utilizes Aurora's proprietary FirstLight LiDAR technology, which offers high-resolution, long-range sensing capabilities. Here's everything to know about this stock, and after I'll tell you if I'd buy. First is zero revenue, high burn rate. Aurora reported $0 in revenue for 2024, while incurring a net loss of $748 million and burning $645 million in free cash flow. This underscores the company's pre-revenue status and significant cash consumption. Second is strong cash position. Despite the losses, Aurora boasts $1.22 billion in cash and no debt, providing a substantial runway to fund operations and development. Third is stock performance, a volatile ride. AUR's stock has seen a 118% increase over the past year, yet it's still down 38.9% since its IPO. The stock's beta of 2.79 indicates high volatility. Fourth is strategic partnerships fuel optimism. Collaborations with industry giants like Nvidia and Continental aim to deploy self-driving trucks by 2027, boosting investor confidence. Fifth is valuation concerns. With a price-to-book ratio of 5.6 and no revenue, Aurora's valuation is challenging to justify, especially given its current financials. Sixth is leadership with deep industry roots. Co-founders hail from Google's Waymo, Tesla, and Uber, bringing valuable experience in autonomous vehicle technology. Seventh is high-risk profile. Aurora has disclosed 67 risk factors, with 43% related to finance and corporate governance, highlighting significant operational and financial risks. Eighth is focus on autonomous trucking. Aurora is targeting the autonomous trucking sector, with plans to launch services in Texas, positioning itself in a niche with substantial growth potential. Ninth is profitability challenges. With a profitability score of 15 out of 100, Aurora faces significant hurdles in achieving profitability, as indicated by its negative operating income and net income. 10th is speculative investment. Given its pre-revenue status, high cash burn, and ambitious goals, investing in Aurora is speculative and best suited for investors with a high risk tolerance. I personally would pass on this stock. A couple of years ago, a lot of these LiDAR stocks were pitched, and most of them performed poorly. This one has had a good year, but the time to buy was probably last year. It's hard to imagine the company climbing much higher when it has no revenue. Luke is pitching a bunch more self-driving stocks in this presentation as well. Here's what Luke says about the first one. Tesla stock number 1. While Nvidia makes the chips that help train the self-driving program, this company makes the chips that run the inside of the Tesla. One of the original partners of the EV upstart. This could be a lot of companies, and my best guess is ST Microelectronics. I only say this company because this company is getting pitched a lot right now by stock pickers. If it is the stock, I wouldn't buy, and here's why. First is revenue freefall. Q1 2025 forecasts signal trouble. ST Microelectronics anticipates a 27.6% year-over-year revenue drop in Q1 2025, projecting $2.51 billion, which is below analyst expectations of $2.72 billion. Second is industrial and automotive sectors in decline. The company's key markets, especially industrial and automotive, are experiencing significant downturns, contributing to the revenue decline. Third is inventory challenges. Excess stock weighs down. ST Microelectronics is grappling with approximately 2 months of excess inventory, indicating slower demand and potential future write-downs. Fourth is leadership under fire. Governance concerns emerge. The Italian government has expressed opposition to CEO Jean-Marc Chery amid allegations of insider trading and dissatisfaction with management decisions. Fifth is cost-cutting measures. Job cuts on the horizon. Facing financial pressures, ST Microelectronics is considering up to 3,000 job cuts, approximately 6% of its workforce, as part of a $300 million cost-cutting initiative. Here's what Luke says about the next stock. Tesla stock number 2. This company provides a number of high-tech components used in electric charging. As Tesla's AVs will be fully electric like all of their cars, demand for electric charging equipment will only go up. Plus, they provide the same equipment to GM, Ford, and Volkswagen. I think this stock is Volex, and the ticker is VLX. Volex supplies high-tech components, specifically authentic couplers and connectors, for electric vehicle charging infrastructure used by Tesla, as well as other major automakers like General Motors, Ford, and Volkswagen. I wouldn't buy this stock either, and here's why. First is low margin, high competition. Volex operates in a crowded industry with razor-thin margins, making it hard to stand out or generate massive profits. Second is acquisition binge raises eyebrows. They've been snapping up companies left and right, which sounds exciting, but it also increases debt and integration risk. Third is not exactly a growth machine. Revenue has been growing, but not fast enough to justify a premium valuation. This isn't your next 10x stock. Fourth is exposed to economic cycles. As a supplier in automotive, consumer electronics, and industrial markets, Volex is heavily exposed to economic slowdowns. Fifth is thin liquidity, limited coverage. The stock is thinly traded and under the radar, which means higher volatility and fewer analyst insights to rely on. Luke says this about the next stock. I've also included 2 other stocks that could lead the way as this self-driving revolution takes hold. And neither has anything to do with Tesla or Waymo. One company is the leader in Chinese self-driving cars. You could almost call them the Waymo of the East. But it has its sights fixed on going outside mainland China, looking to expand in Hong Kong and beyond. If Tesla and Waymo are shaping up to be the dominant forces in North America, then it's worth it to diversify and bet on the potential self-driving giant of China, a country with more drivers than the entire United States population. My guess for this stock is Baidu. Baidu is a Chinese multinational technology company headquartered in Beijing, primarily known for its dominance in China's internet search market. A significant aspect of Baidu's AI endeavors is its autonomous driving initiative known as Apollo. Launched in 2017, the Apollo platform is an open-source autonomous driving system that supports various levels of vehicle autonomy. With all of the tariff stuff going on, I'd pass on anything Chinese at the moment. After all of this passes, I'd be open to giving this company a second glance. So putting it on a watch list could be smart. Here's what Luke says about the last stock. Another of the recommendations in this report is a Chinese LiDAR company that just signed a deal with Volkswagen. They own the most LiDAR patents in the world and control nearly 74% of the worldwide LiDAR market. As self-driving cars take off, I expect all three of these companies to do brisk business. This company is Hesai Technology. Again, not really interested in any Chinese company until the tariff situation is figured out. This company intrigues more than Baidu, though, and will also be going on a watch list. And make sure to click the link in the description to check out Alpha Picks and get $50 off this amazing service.